Hi everyone. Today let's start off with the economic calendar. We'll get straight into the charts, and then we'll take a look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open and Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the economic calendar, you can see Empire State Manufacturing Index was down quite a lot, significantly more than expectations. Retail sales more than expectations. Retail sales ex motor down more than expectations. Industrial production down more than expectations. Basically, everything was down quite a bit. Home Builders Index was actually slightly better than expectations, but still bad at 35. Anything better than 50 is good, and anything below that is bad, so definitely not doing well there. Moving over to Thursday, we have initial jobless claims, continuing jobless claims, building permits, and then we have another manufacturing index here, so those will all be interesting. We also have the Boston Fed president speaking in the afternoon, as well as the New York Fed president speaking in the evening. So all of those will be interesting, definitely worth taking a look at. And then also after hours on Thursday, it's not economic data, but we do have Netflix, one of the first tech companies to be announcing their earnings. That'll be after hours tomorrow as well. I do want to highlight Netflix here just for a moment. They say earnings announcement 19 January, so after hours, you can see estimates actually ticking down quarter over quarter. And looking at the forecasts, you can see here we have quite a few people moving their revisions down. Last quarter, they did surprise pretty heavily, 46% to the upside, and they have been quite volatile on things like this. You can see here December of 21 was also a huge upside surprise. It's worth noting that they've had a couple of revisions to the downside. You can see those listed here. But when you get all the way out to 2025, they have an earnings per share estimate of $22 per share, which is extremely high compared to where we are right now. That's about a doubling in 3 years from December of 22 to December of 25. So I think this will be interesting. There's a couple ups and downs, potential for gain, potential for loss, but this should be a pretty good indicator on where tech is going. So definitely keep an eye out for this one going into tomorrow evening. So we got our first day of downward price action here. You can see it was pretty sharp throughout the day. The S&P's actually sold off really aggressively. They hit resistance one more time, just for good measure, hitting that $400 level. And then it sold off $9. So really aggressive down move. Couple of percentage points to the downside. Even over to the day, you can see better about what that looked like. Down 1.5% on the day. Got below the 200 EMA on the daily chart, confirming that down move. Just like we talked about yesterday, daily momentum stepped down really dramatically. And you would expect this to continue after the rally we had, big rally up. And with that momentum ticking to the downside, you would expect at least a couple more days of downside. I do want to highlight that we are extended already on the hourly chart, jumping up to the 4-hour. We're continuing to the downside, got below the 50, so good to see that. But we are stuck right here at the 200 simple moving average on the 4-hour. So I wouldn't be surprised if we got just a slight bounce, reconnect with these EMAs, and then we get a sell-off maybe into the midday. I'll definitely be watching this at the open. There's certainly possibility that we push down immediately and we get the continuation, but definitely be aware that maybe we push up to like 394, maybe even slightly higher, 395. Into this zone, get a slight pushback, and then we get the continuation. Certainly not impossible, and I will be looking for the break of that 200 moving average on the 4-hour chart. I certainly think we're going to get it, and I think we are going much lower, but be aware it's probably not going to go in a straight line. Similar story on the NASDAQ. Got that big sell-off, one slight push up, tested resistance once again, got up above that 238.50 level like we thought that it might, and then got quickly rejected. Didn't even make it up to the 285 level, so definitely weakness. Did not get extended on the hourly, so that's good to see. There is some room for downside, but we did see a slight fade in momentum here on the hourly. 4-hour showing lots of weakness, as we suspected that it will. Did not get below the 50 on the 4-hour, so that's interesting. Definitely would like to see that continue across the 50 line into that bearish territory. But once again here on the 4-hour, we're stuck above that 200. Jumping up to the daily chart, you can see the 200 is significantly higher, sitting all the way up at 295. So we're stuck between the 4-hour and the daily chart 200 moving averages. But it is worth noting here also on the daily chart that the momentum did tick back into weakened bullish momentum, just like on the S&Ps. And you would expect this to continue to step down over the next couple days, giving us that bearish push. Moving over to the Russell has been significantly stronger than the others here recently, but it did sell off today just like the others, but we are significantly higher than the 200 moving average on the 4-hour here. It really did sell off just as much as the others, if not a little bit more on the day, but we are much higher than the 200 moving average like you would expect it to be at based on the SPY and the NASDAQ. So that's interesting. Definitely could certainly expect this to come down into that zone and retest and get a bounce. Usually get at least some interaction and some upside bounce after you touch the 200. So that's something to keep an eye on. Maybe the Russell starts to outperform, come back into this zone as the other major indices start to move down lower, but the Russell finds some support and stays a little bit higher. Moving over to Apple and Tesla. Apple did exactly what we thought it was going to, got up into this 138 zone between the two moving averages, threw that wick to the upside and then sold off. It's worth noting that this is still a bullish pattern. We are still above the 21 EMA here, but we're stuck below the 200 moving average here. So interesting to see. Definitely could get a bounce here, maybe make a double topping formation. Did get slight bearish momentum here on the 4-hour. Tesla holding up a little bit stronger, not as bearish on momentum here, but we did get overbought conditions just for a moment on the 4-hour, as you would expect. And then we did sell off throughout the rest of the day. Did not get below the 50s here, so definitely looking for that cross. Once we cross the 50, you would expect it to get all the way into oversold conditions. And once we get those oversold conditions, then you would expect at least somewhat of a bottom. In terms of price targets, Tesla could probably get all the way down to 110 over the next few days. And then for Apple, honestly, I would expect it to probably retest the lows sitting down at 124. And if this sells off, kind of like it's been looking, we could certainly make new lows here in Apple. Definitely keeping an eye on both of these stocks. They have been propping up the NASDAQ here recently, and if they do start to downturn like I think that they will, that should pull the NASDAQ down with it. Moving over to IYT on the hourly chart, not a lot to say here. Rallied into the morning, sold off throughout the session, looks really good for more downside potential. Has plenty of room to get down to that 200 moving average on the hourly chart. Jumping up the daily chart, here's what that looks like. A significant breakout of the 200, so definitely keep an eye on that. As we get back into that zone and we retest, that'll be something to watch. It's got to get down to about 225, 224 in that zone over the next few days. If we do get a bounce from there, that would be interesting. Certainly come into that zone, double top, and push down from there. Just because we did get the breakout to the downside like we've been expecting doesn't mean that it'll happen all at once. And some of these charts, like transportation, are showing a little bit of strength. Moving over to semiconductors, do want to touch this one because we did come up to resistance, get that rejection, sold off throughout the day here like we thought we would. We did not engulf the entire previous candle, so that's demonstrating a little bit of strength. That's definitely interesting. Tomorrow, you would like to see that previous candle engulf, showing some more downside potential. We did get the step down on the daily chart, and we have continuing steps down here on the 4-hour. You would expect this to go negative either tomorrow or the next day. But again, similar story to transportation. We did get pretty significantly above the 200 here. I would expect a retest of that down here at about 216, 217. And then we'll have to be watching for that interaction. So if we do get a bounce, that could be interesting. Come back up, test resistance. And then if we do get a breakout, we do have to keep an eye out for that. But at this point, I would expect a double rejection, double top style pattern, and then a push back down into that 200 zone. Certainly, the base case for me is lower prices right now. But of course, getting above the 200 is a big step on the daily chart. Moving over to consumer staples and consumer discretionary on the left and the right. I've been hearing a lot of people talking about how we're rotating into consumer discretionary and out of consumer staples, and how that indicates that we're going to see higher prices. People are in a risk-on style mode. Honestly, to me, what this looks like right now is that consumer discretionary has just moved up really dramatically, hit significant resistance, and that there is basically no more upside here in the short term in consumer staples. We've been talking about this fading off for a while, getting back into this 72 zone. We're not quite there yet, but it definitely looks like we're going in that direction. We're below the 200 on the daily chart. And I would suspect that we're going to find some support when we get into this 70 to 71 zone. And if we do, and we see consumables starting to push higher, we do have to be concerned that the economy is still weak. People are not buying consumer discretionary products, and that this is not the place to be. Honestly, to me, this looks more like a counter-trend rally on consumer discretionary. The downtrend is still pretty significant. We're definitely not testing the highs or anything like we have been in some of the other stocks like semiconductors. And right now, I just think this looks like a counter trend. Consumer staples were overbought, consumer discretionary were oversold, and we're just seeing a little bit of a balancing between those. And it doesn't mean to me that people in the markets or the big players are risk on at this point. That's not what I'm seeing. And I would need to see more evidence of that before we say the markets are going risk on and that this is a bullish market. Moving over to yields, I definitely want to talk about yields. We got a breakout. I thought we would come in and retest and bounce, but that's not what we saw on either chart. So on both charts, we came in, hit that trend line, and broke right through it really dramatically. And that's not what you want to see if you do expect the markets to move down. So we're in oversold conditions, which is good. We certainly could see a bounce from here. That's interesting. But really what I wanted to see was a breakout, the retest. We saw a couple of pins on that retest. You can see here on the 2-year yield, a couple of pins, looked like we might bounce, and then we just pushed right through it. Definitely not great. You can see here on the 10-year came up, touched it, kind of considered bouncing, but not really, sold out right through it. Not good. So I thought we would bounce, definitely didn't get that. And this is what's making me a little bit more hesitant to short. If we do see a nice bounce in yields, I will definitely get a little bit more aggressive to the downside. This was interesting to me. And usually you want to see yields going higher if you're trying to short tech and growth. Moving over to the DXY, not a lot to say here. We did throw a pretty big move to the upside, big move to the downside, and then finished basically flat on the day. Not a lot to say here. Level of 102 continues to hold, which is good. You definitely want to see the dollar go higher if you're trying to short. It is worth noting on the 4-hour that the RSI continues to tick higher. You'd want to see this cross through the 50 level here going into tomorrow. That would be great. Got above it just briefly here on the 1800 candle last night, but throughout the session here into the morning was not great. Sold off into the morning and then rallied kind of into the afternoon. We actually got down to this level of resistance all the way down at 101.50, which we had charted going into the day, had been a level of support multiple times. At this point, I just want to see this start pushing to the upside. Break out of this range, break out above this new 102.83 level that we've kind of generated here, and see some upside potential in the dollar pushing down on markets and specifically tech. Moving over to JNK, you can see here markets gapped up, pushed down throughout the session, and then finished basically flat on the day. Not a huge move, and you'd want to see this break out a little bit more to the downside. We did get a lower RSI read. The 4-hour momentum is still ticking down. Hopefully this turns bearish tomorrow. That would be great. Momentum on the hourly, getting close to that 50 line on the RSI. Definitely want to see that crossover as well. And start pushing back to the 200 moving average on the hourly chart, which is currently at 91.77 or 91.58 based on the charts. So definitely could see this push back down into that zone, and that should take tech along with it. So everything looking good for the down move, definitely bearish going into tomorrow. Just a little bit hesitant because of how aggressive we saw yields pushing down today. Moving over to TLT, not the same thesis here. So we gapped up and rallied throughout the session, finishing basically at the highs here. Pretty interesting. RSI read was lower, so we do have some official divergence here. We have a new high and a lower RSI read on the 4-hour chart, which is interesting. Previously, we had some divergence here, and then we did get a sell-off after that. Not a huge, but a little bit. And you would expect the same thing to happen here. We had a high and a high, but lower RSI. And you would expect that to sell off here, which would be good for yields. As bonds go down, yields should go a little bit higher. And hopefully that puts a little bit more pressure on tech going into tomorrow. Moving over to the VIX, finishing up on the charts here today, we have the hour and the 4-hour. Basically, you saw everything you would want to see. Fell a little bit into the morning and then rallied throughout the session, showing lots of strength. Similarly, on the 4-hour, we did leave a gap behind, which is a little concerning. I'm sure we'll come back and fill that at some point. But right now, everything looks good. We're rallying back up to the 200 SMA here on the hourly. And you would expect probably a bounce at that level back to the downside. And then we get a continuation to the 4-hour 200 SMA, currently sitting at 22.22. We get a push back up to there. That should be a pretty good indicator that we're going to go much higher and that we're going to start that breakout to the upside. And stocks should be selling off pretty dramatically at that point. So far, so good, basically across all of the charts, except for yields. Finishing up with my accounts for the day, it says plus 260, but that's absolutely not true. I'm down about $165 on the day, which is not bad at all considering how much the NASDAQ was down, about 1.5%. So $160 is about 0.1%. So not bad for me. Got a little bit shaken out on a couple of moves today, but it definitely looks good going into tomorrow. So positions for me, I just have 2 short calls at 280 for 61 cents each. I'll be watching to look for some short shares and potentially some short futures, depending on what the price action looks like. I'd like to see a little bit of a retrace, give some better entries, then we can sell that position going to the downside. But right now, all I have is 2 short calls sitting at 280 in my individual account. Let me know in the comments if there's any charts you would like me to go over. Let me know where you think the markets are going to go tomorrow. Is this the start of a bigger push down? Are we going to see a higher low and a push up through the bigger trend line? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. I make this video every single day that the markets are open and Sundays, so definitely check those out. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.